Tuesday, May 21st, 2019, Maneco 64, home of alternative economics and contrarian views. Yesterday was a rare day. I went to play a golf tournament, 36-hole tournament, and I had to be out of the house the whole day. Left home around 6 o'clock, came back around 7. I felt a bit my age yesterday. I'm 54. The golf wasn't bad, but on the back nine, on the second round, kind of lost, not concentration, but got a bit tired and had a few bad holes. But I really enjoyed it. Played with some very good players. One of the players I played with is off 1. And on the first 9 holes of the day, I actually beat him by a shot. But he ended up beating me by a mile. He did very well. And but it was very enjoyable. Tough conditions in that it was very windy. A links-style golf course, which is a completely different game than normal parkland golf. But anyway, I'm back. I will make up missing one video, but sometimes it's nice to get out and not look at things all the time, have a little bit of more perspective. One thing I noticed driving there and back, I put the radio on a little bit, listen to the news, BBC radio news. Don't listen to that too much. And there's a lot of talk about Huawei and the tensions between the US and China. The Economist magazine, some of you probably heard me talking about it in my live stream on Sunday. Even the cover, the most recent cover here in the UK says a new kind of Cold War. So that's what you have here. The Economist magazine. They even have a section, a whole section in this special report about this. I haven't read it yet, but yesterday on the radio on the way back home, I was listening. They had one of the Chinese officials speaking. He was speaking in Chinese, but they translated it. Basically, he said that it's unacceptable what has been being done to Huawei. He actually accused the Americans of trying to sabotage the company, and that they have no proof that Huawei is spying. So I think things are getting quite heated. What do I think it's all about? I think it's more about a distraction that they're trying to create, the Chinese and the Americans. They're trying to gain brownie points with their domestic constituents, because they know there's a really big economic implosion coming. That's what I think it's all about. Of course, there are things that could be ironed out and improved between these two superpowers, but I think it's mostly like trying to, how can I say, placate the domestic public, because they know what's coming is not going to look good. And this morning, as I speak here, it's fairly early. It's just before 6:30 a.m. I've got up early today. I've seen some interesting headlines that goes to show that all around the world, things are getting worse. The latest one is Australia's central bank signals rate cut in June as economic growth cools. So this is what it says here on investing.com. I'll go through it. Australia's central bank, it's the Reserve Bank of Australia, that's the name, would consider cutting interest rates next month to support the economy. Governor Philip Lowe said on Tuesday, as he urged the country's newly elected government to do its part by slashing income taxes and boosting spending. So we have here the central banker, Philip Lowe, even urging politicians, even giving advice on fiscal policy, which is pretty amazing. I have spoken about Philip Lowe before. I did a video about, I think it was John Adams in Australia. He's covered how Australia is you know, keeping all its gold, I think about 80 tons, with the Bank of England, and gives very little information about that gold. Yeah, it's a bit of a scandal there. And they won't even do an independent audit of that gold. It's the Bank of England itself that has done the audit. Which doesn't make sense at all. The institution that's supposedly holding that physical gold does the audit, and you have to warn them in advance when you want to go see the gold. It's because the Bank of England is one of the biggest manipulators of the gold market, the gold price. They're one of the biggest instruments for the Fed, the BIS, the major central banks, because London's still the center of bullion trading. And how do they do the manipulation? Well, they lease out a lot of the gold that they hold for other people, and they lease it out leveraged, highly leveraged, to the bullion banks that trade in the global FX market, the LBMA, and they're also involved on COMEX. So Australia's involved in this, and now I find it amazing that their own central banker says that the government has to do more as well. I thought they were independent and they only, had to focus on monetary policy, but apparently Mr. Lowe hasn't got the message. It says here, this is what Mr. Lowe said: a lower cash rate would support employment growth and bring forward the time when inflation is consistent with the target. Well, Australia, it says here, has a target inflation of 2 to 3%. Which is really ridiculous. Inflation should be zero. Why do you want to, have the purchasing power of your currency every, 30 years or so by doing that? So that's another sign there. The Australian base rate has been at 1.5% for almost 3 years, and it's it looks like they could cut next month. So interesting there, Australia. The GDP growth is slowed down quite a bit. I think in the last quarter of last year, it grew at only 0.8%. And I'm sure the Australians are doing the same thing that the Americans are doing, and the British, the UK, with their statistics. It's all fudged. And the cost of living probably is rising quite a bit more in Australia. I haven't looked. I know I have a lot of viewers from Australia. Maybe you should, you can comment below in the description and tell me what you think about this and what you really feel the cost of living is rising by. And I use the word cost of living because inflation is a corruption of the language, because inflation itself is the growth in the money supply, and credit, which has been humongous in the last 11 years. But we know that the powers that be, mainstream economics, they've corrupted the word to mean actually the rise in prices, inflation. So that's why I call it cost of living. Yeah, China, a lot going on, and there's other headlines as well here. When you look, Xi sends Trump a message: rare earth export ban might be coming. I read the article in Zero Hedge. Rare earth metals, China produces the great majority of it. They're saying here that China could ban the export of that to the US. It would hurt a lot the technology sector. It probably would hurt a bit of the Chinese companies, but I'm sure they have like a contingency. The other thing, I guess, is China and treasuries that they hold. Do I think they're going to unload their $1 trillion plus of U.S. treasuries like that? No, I don't think so, but they might not buy as much in the future, and they might get rid of some more in the future than they would have in the past. What else are we seeing? North Korea as well. It's up there. I read in The Economist that the Americans seized one of the North Korean ships. the situation in the Persian Gulf isn't great. Another headline here, Iran says uranium enrichment quadrupled. So could it be that the more they know that things are getting worse economically, financially, monetarily, that they give us some huge crisis? I don't know what it's going to be. Is it going to be a real war, or a kinetic war? There's a lot of stuff going on in the South China Sea as well, Persian Gulf, a lot of tension. That's what I can see here. The markets yesterday, I saw that the NASDAQ underperformed, mainly because a lot of big American companies would lose or will probably lose a lot of business that they do with Chinese companies, especially Huawei. So the NASDAQ dropped 1.5%, 115 points. The S&P dropped just under 20 points, so 2/3%. And the Dow dropped 84, 1/3%. So right now, it's 6:33 a.m. So I'm quite early because I got to go out early today. But I'm going to have a look at the markets here, see what we're doing. We've got gold, which I saw yesterday pretty much didn't do that much. Went down early in the day, traded back up later in the day. Right now we're at 1275. Down just over $2. Range has been 1278.50 to 1275. Silver, I saw that it had a spike lower early yesterday, but and then it rebounded quite well. Right now we're at 1443, down about 3 cents. The stock market right now has rebounded somewhat. The Dow is up 100.4%. S&P is up 0.48%. So lost 2/3, but so it's regained some of those losses. It's up 14 at 28.53. And the NASDAQ 100 is up 48 or 2/3% at 74.22. The currencies right now are fairly steady. Cable is 127.20, down about 5 pips. Euro is 111.54, down 0.1. And the dollar is up, has rebounded against the yen. It's now at 110.17. It's up 0.1. Dollar down about 0.12% against the Chinese yuan at 693. I noticed yesterday that actually the bond markets, the yields rose about 3 basis points in the longer end of the curve, which was a little bit unusual, seeing that the stock markets drop. Right now, yeah, they're basically unchanged. The 10 years around 242. So the curve has disinverted 3 to 10 years, but need to keep an eye on that as well. I saw Australian rates today dropped quite a bit. Let's have a look at the Aussie rates. Yeah, so the Australian 10-year yield is dropped almost 4 basis points. It's at 1.65%. Let's have a look at the yield curve. The 1-year Aussie bill rate is 1.29. So the Aussie curve is still, upward sloping, which is normal. It will be interesting to see if we see some inversion in the Australian yield curve coming up. What about crude? Well, crude is pretty strong. WTI 63.50, up 28 cents, 0.5% higher. Brent 71.62, up a quarter. I noticed yesterday driving to and from and back from the Gulf that petrol or gas prices, in the UK we call it petrol, are quite high. I haven't seen them as high as they are for a while, even though, and that's based on a combination of the weaker pound and the fact that oil prices are staying quite elevated. So there you have it. That's my view on what's going on right now. The technical picture for the stock market, for example, is still not looking great. If you look here at the Dow chart, and if you look at the NASDAQ chart, it still doesn't look great. It looks like even in the NASDAQ 100, looks like we're forming a head and shoulder here in this daily chart. The let's see the S&P 500. Let's look at a daily chart. See if, yeah, that's really interesting. You can see here these head and shoulders that are forming. Of course, I've got these rising wedges here, but now within this rising wedge, it looks like there's a neckline. You know, it looks like there's a head and shoulder forming. So let's just sit back and keep an eye on things and see what you know, develops in the future in terms of geopolitics, markets, and finance. If you enjoyed this video, make sure you hit the like button. If you enjoy my videos but haven't subscribed yet, think about subscribing. Share it far and wide as well with people you think might enjoy this kind of content. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.